Hello, everyone, and welcome to a new PennyWise podcast from Lee Enterprises. I'm your host, Teri Barr. Well, I want to talk to you about inflation today. Yes, it's that big I word that we're all talking about these days. It means higher prices hitting so many of us, and it continues. We are not going to see an end to this, it seems, anytime soon. But there's an interesting and possible light coming down the tunnel anyway, and it could mean tax bills in 2023 bring a little better news. We are so fortunate to have joining us today to talk about this topic Andy Rosen. Andy Rosen is an investing and taxes spokesperson with NerdWallet. Andy, thanks for being here today.
Thank you for having me.
This is so interesting to see kind of the ups and the downs of what's happening with inflation and income and prices. So, right now, if you had to be asked about income and if it's not keeping up with inflation, what is this going to look like? What could be the projections for tax bills? And I guess we really are looking as far ahead to 2023. Can you explain what we might be seeing?
Right. So the IRS has to set the tax brackets every single year, right? Most times it's not that exciting of a process. People pay attention to it. Obviously, accountants do, and people who are doing taxes for folks. But this year it's making a bigger impact because the IRS is doing what it can, in its view, to help people prevent what's called bracket creep. Basically, that if your income goes up alongside the cost of living, you wind up paying higher taxes, even though your standard of living doesn't go up. So what they're doing here is raising basically the cutoffs of the tax brackets by about 7% to account for the inflation we've seen this year. And just want to note here, as we discuss this, that I am not a tax professional, and this is not individualized advice, but I think there's some really interesting general things that everyone should know about this.
Well, it is very interesting, and to learn about it now for maybe for planning ahead purposes is a good thing. And to have somebody like you to sort of help walk us through what we need to understand. There's always so much when it comes to trying to figure out the taxes and the language and everything that goes with it. So we're happy to be able to talk to you. When we're looking ahead, and again, I want to emphasize also, we're talking about 2023 when you're paying your 2022 taxes. What do you think we could expect when it comes to maybe any of the tax bracket adjustments that, I don't know, hopefully they'll help?
Right. So one thing to remember is that you're going to pay taxes in 2023 based on what you made in 2022. That is not what we're talking about now. That's something the IRS set last year around this time. Instead, what we're talking about is how you'll calculate your taxes on what you earn next year. So obviously, it's a little far behind. If you're worried about kind of what's going to happen to your expenses next year, you're worried about a big tax bill, maybe you got a raise, but the cost of groceries, rent, et cetera, is wiping that out. That's the thing what the IRS is trying to deal with, but you won't really see the impact of these particular actions until until you file your 2023 taxes, which happens, as you probably know, in the first part of 2024.
Okay. So thank you for that explanation. That helps us sort of begin to look ahead. And what about earned income? Is there anything there that people should really keep an eye on moving forward?
Yeah, so there are a handful of other aspects of the tax code that the IRS can tweak thresholds based on the cost of living or inflation. And what they've changed includes the earned income tax credit, which is for people who have lower incomes and get an automatic tax credit. And the tax credit is, it pays actually part of your tax liability rather than reducing, your taxable income. It actually just takes a chunk out of whatever your tax bill would have been. Now, that's a pretty important credit for a lot of people, especially people on the lower end of the income spectrum. Those people are going to see a similar, threshold increase. We've got things like the gift threshold. Generally speaking, gifts that you give have a limit before it becomes taxable. That threshold will rise. If you do an adoption, expenses related to adoptions are are often deductible, those will rise. The threshold will rise there. Yeah. And also a health savings account. If you have a health savings account, the IRS has made some tweaks to account for inflation there as well. So there's more, but those are some of the big things that affect a lot of people.
And I want to ask you again, some people are not getting raises and may know their income isn't going up anytime in the next year or two if they're under contracts of some sort. What happens if you do get a little raise, but inflation is still up? I mean, could that tax bracket adjustment with the ceiling we typically see, could that go up a little bit too, so that maybe you don't jump into that higher tax bracket?
Right. That's exactly what the IRS is trying to prevent here, and why the IRS is even allowed to change these thresholds.
Okay.
Because essentially, if you make more, but you have to pay more to live, then you're not really making more. Like, you may make more than your parents made, but that was 30 years ago. And, you're actually having a lower standard of living than they had because you have to pay more to live. Like, remember what a candy bar cost in the store when you were a kid and what it costs now. I mean, you joke about it, but that happens across the economy. And if you can't afford a candy bar, then it doesn't really matter how much you make, right? The numbers need to be in relation to one another.
Okay. Other things that we may be seeing in the tax years ahead. What about standard deductions? Everybody wants those, right?
Well, you may want the standard deduction. It really depends on your circumstances. But the standard deduction is basically something you can deduct from your taxable income without having to do anything on your taxes. Everyone gets to deduct it. And that amount has also gone up next for 2023. So essentially what that means is if you don't want to itemize all your taxes, or you don't think you had enough taxable expenses or tax credits taxable deductible expenses that you could claim there, you can just simply say, I want the standard deduction. And that is also higher. So you can take more money off the top line that winds up, I'm so sorry. That was, I didn't shut off my Slack messages.
Oh
no. I'm really sorry. I always do. Okay. You want to, I really apologize. That was
no,
Slack.
it's okay.
Right, you want to go through that again?
Sure. There are so many different things we could talk about, but one thing I think we need to ask you about is, the standard deductions. What are we looking at when it comes to this part of taxes?
So, right, the standard deduction is basically a way for you to deduct a large amount from your taxable income without having to itemize anything, without having to say, I spent money on this, it's deductible, here are the receipts, et cetera, et cetera. All you have to do is say, I want the standard deduction, you get it. And that's going up too. So again, you'll be able to cut a bigger amount off your top line income in 2023. You may not want the standard deduction. You may want to itemize your deductions, which means basically, say mortgage interest, other things that you do for a business, all sorts of deductions available to you. You may want to add those up, and that may be more than the standard deduction. But if you're just taking the standard deduction, if your taxes aren't very complicated, it's another bonus for you in 2023.
Okay. Anything else jumping out at you right now about any of the changes that are happening? And could more changes still come? Or is this it?
Well, I think we're going to want to have our eyes out for where inflation goes next year, right? The IRS has made these changes based on what happened this year and what we've seen so far. They can't react to what hasn't happened yet. So if inflation levels off and the standard of living kind of starts to grow in a way that is a little bit more predictable, this could really be a relief in 2023. If not, it may not even be enough to offset, the expenses you're facing, when you start to line up to pay your taxes in 2024. I just think for now, it's pretty rare that the word inflation and good news is in the same sentence. And I think this is pretty modest good news because they wouldn't be doing it if inflation weren't so high, and that's bad. But, it helps a little bit.
Yeah, no kidding. What would you say is the bottom line for people who are listening?
The bottom line is you should look at your own tax liabilities and see, if you're worried about paying your taxes in 2020 if you're worried about paying your 2022 taxes, you may want to take a look at what deductions are available to you. Because if you're spending more because things are more expensive, if you haven't maxed out these deductions before, your deductible expenses could be higher. So that might, be a little bit off the top of what you may owe. And again, just pay close attention. With these deductions potentially being more valuable to you, you might want to be really, really scrupulous about saving receipts, keeping records, making sure that when you're going to this 2023 tax year, you have everything in order and you can get the maximum benefits that are available to you.
Oh, that sounds like the best plan of action right now. Andy, anything we've missed?
No, but there's a lot of coverage on this on NerdWallet. If you want to read about it, you can compare the tax tables for this year and next year. You can definitely find a lot about how to handle this in our taxes section. And also the IRS obviously has lots of great information on this.
Terrific. We will include those in our show notes as well for anybody listening and trying to figure out how to plan ahead, which is always a good thing to try to do. Andy Rosen from NerdWallet, thanks so much for joining us today.
You're welcome.
And I'm Teri Barr, your host of the PennyWise podcast from Lee Enterprises. A new episode every single Thursday. We'll talk with you next week.
Are we clear?